Guys, let's now do a quick recap or a quick revision of how share-based payments work. Share-based payments are, see, the name of the standard is not share payments. So that means those, the settlement of an obligation which is done either by giving shares or by giving something which is based on shares. ठीक है some so it's not necessary that share based payments necessarily mean that I am issuing shares to the other party. I might pay an amount to the other party whose calculation is based on the share values. ठीक है so share based payments are payments made to other parties which are either settled in shares or they are settled in an amount which is calculated using shares as the base. In IFRS 2, again, we have very limited expectation in SBR. There could be two types of share-based payments: equity settled share-based payments, where the company allocates shares to the individuals, and cash settled share-based payments are those where the company pays an amount equivalent to the fair value of shares. No shares are given in exchange. What you give is, you give, say for example, I tell Roshan ki, Roshan, I'm promising that when you get your SBR result, I will give you the difference in the fair value of gold today versus the date of result. Okay, so let's say today gold is 10 grams of gold is worth 1 lakh, and on the result day, which could be say 14th 15th of Jan, the gold is worth 1 lakh 10,000. So I'm not giving you gold, Roshan. Please don't misunderstand me. I'm giving you the difference in the fair value of gold between today and on the date of result. So I'm paying you cash, but how is the amount payable calculated? On the basis of the price of gold. So I would call it gold based payment. I'm not paying gold to you. I'm not giving you gold. I'm giving you an amount which is calculated on the basis of gold. That is so. Similarly, if I tell you, Roshan, uh, whatever is the, I want to give you a gift. So whatever is the fair value of shares of State Bank of India on your result day versus whatever is the fair value today, the difference between the two I will give you. Okay. So let's say I have 50 shares of SBI, each worth 900. And then I tell Roshan ki whatever is the difference, I'll pay you that. Say the value is 924 on his result date. I will pay him 1200. This is share based payment, not shares are getting issued. These are known as, again, cash settled share based payments. Okay. Now, there are a couple of terms that you need to understand with respect to share based payments. First one of which is the concept of exercise price. Exercise price is also called as strike price. ठीक है. What is exercise price? Suppose I tell you that, Roshan, if you work with me for 2 more years, then at the end of 2 years, I will give you an option to purchase shares of the company at a price of 50 rupees per share. So what amount will you pay to purchase the share? You will pay 50 rupees to purchase a share. That 50 is your exercise price, amount that you will pay in the future to purchase a share. What is vesting date? Vesting date is the date at which the counterparty, that is Roshan, becomes entitled to receive the cash or equity instruments under the arrangement. ठीक है. Vesting conditions are conditions that need to be fulfilled in order to receive cash or equity instruments. These could be service related conditions where I will say that you have to work with me for 2 years to become eligible for this. Or it could be a market based condition. What is a market based condition? It could be a situation where I tell you that only if the share price touches 5 rupees per share, for example, you will become eligible to get share option, something like this. So conditions that need to be fulfilled in order to become entitled to receive cash or equity. Grant date is the date on which options are granted to an employee. Okay. And so if I'm granting you the options today, I'm giving you that piece of paper, then that becomes the grant date. Now, usually there is, I'm sure you have done this in AFM, I remember that, where we discussed a concept called option is in the money and out of the money. Okay. Now, see, what is an option? An option is a choice, which means I have given you a piece of paper which allows you to purchase one share at the price of 1500. Now, if the market price is 1600, okay, Now, if the market price is 1600, then naturally you will have the flexibility to purchase one share. See, market price is 1600. The option gives you the right to purchase one share at 1500. Naturally, you will exercise the option and you will not buy the share from the market because the market price is a little more expensive as compared to the share price, as compared to the exercise price. In that case, you say that the option is in the money. Market price 1600, exercise price 1500. The difference between the two is that is, of course, the benefit that you have of holding that particular piece of paper. Now, if the market price is 1400 and the exercise price is 1500, naturally you will not exercise the option. You will let the option lapse and you will end up purchasing shares from the open market. In that case, the option is out of the money. When do you say that an option is in the money? An option is in the money when it is more, when it is cheaper as compared to what the market price is at that particular date. Okay. Now, we'll get into in the money, out of the money a little later, but let's understand what happens if the company has promised to settle the transaction by issuing shares. Check karo, is the transaction with someone, with employees or with others providing similar services? If the answer is yes, measure at the fair value of equity instruments at grant date. If the answer is no, can the fair value of goods and services be measured reliably? If the answer to this is yes, measure at the fair value of goods and services at the date they were received. If the answer is no, fair value of goods and services received cannot be reliably estimated, measure at the fair value of equity instruments at the ग्रांटेड. ठीक है, अब ये देखो, look at this situation. On 1st of Jan 2008, Liminal purchased a patent. The fair value of the patent was reliably estimated to be 3 million. The consideration transferred was 1 million of Liminal's own $1 ordinary shares. ठीक है, on the purchase date, the patent had a useful life of 3 years. Now, first question, is the transaction with employees or others providing similar services? You don't purchase patents from employees, right? So the transaction is not with an employee or with someone who is providing a service similar to that of an employee. Okay. So the answer is no. Then ask, can the fair value of goods and services be measured reliably? Can the fair value of goods and services be measured reliably? The answer is yes, it can be measured reliably at 3 million. Okay. If the fair value of goods and services can be measured reliably at 3 million, then what should you do? Measure at the fair value of goods and services at the date they were received. So you will record this transaction at 3 million. Fair value of item received, patent can be reliably measured. So record the transaction at the fair value of patent on the day it was received. So you will record an entry, patent account debit 3 million, to share capital 1 million shares of $1, to share premium balancing amount. The patent has a useful life of 3 years. Okay. Then entry on 30th of June 2008, naturally you will have to amortize the patent. Now, I could have a situation where on 1st of Jan, Liminal purchased a patent, same as the previous question, but the fair value of the patent cannot be reliably measured. So you are on this path. Can the fair value of goods and services received be reliably measured? No. Patent is what you received and its value cannot be reliably measured. Then measure at the fair value of equity instruments granted at the grant date. Okay. On the purchase date, patent had a remaining useful life of 3 years. The fair value of one of Liminal's ordinary shares was $3.5 on 1st of Jan 2008 and 3.2 on 30th June 2008. When did you receive the patent? You received the patent on 1st of Jan. So you will measure the transaction at 1 million ordinary shares into 3.5. ठीक है, उस तरीके से the transaction will be recorded. Now, what is this transaction is with employees or others providing similar services? I am an employee of Plutus. I am providing coaching services. ठीक है. Now, Vardhan is not an employee of Plutus. He is a consultant. But he is also coming to Plutus and teaching. So the transaction with Vardhan is with others providing similar services. जो मैं service provide कर रहा हूँ, he is providing a similar service. Roshan supplies, notebooks and paper to us. So the transaction is with someone who is not providing similar services to an employee. That is the difference that we are talking about. ठीक है, एक बार ये एग्जाम्पल देखो।
I have a small doubt here. Like when the patent's price, like fair value was not determinable, like then it shouldn't be recorded as an asset as per IS 38, right?
I beg your pardon, can you repeat?
If the patent's cost cannot be measured reliably,
Mm-hmm.
then it shouldn't be recognized as an asset as per IS 38,
That
right?
is fair, but here the cost can be measured reliably. Why am I saying that? Please understand. Now, I know that you have a shirt that you are wearing. Okay, you don't know what is the value of the shirt now. I say, Roshan, I want your shirt. I really like it. You'll say, okay, take it, but I want something in return. I tell you, you know what, Roshan, I will give you three iPhone chargers in return.
Mm.
And you're like, yeah, against this shirt, I'm okay to accept three iPhone chargers, each one worth 1000 rupees. So, although you cannot measure the value of the shirt that way, you are accepting something in exchange of that shirt, whose
Mm.
value can be determined, right?
Yes, yes, sir. Yeah.
The value of that particular item can be determined. So, in that particular case, what difference does it make? While the amount of the shirt cannot be measured directly, but it can be measured indirectly and what is the reason behind that? The reason is that you are accepting something in exchange of that particular item, correct? And that item ka value you can measure reliably, and you are ready to part with your shirt against three chargers. So in your mind the value of your shirt is equivalent to the value of those three chargers, which is 3000. ठीक है?
Okay. Yeah, I get it. Thank you.
चलो, now what are stock options? See, stock options are a tool that companies often use in order to keep the employees on their side. There are times, when startups want to hire some brilliant people, but they don't have enough money to fulfill their cash compensation expectation. So they say instead of paying you 50 lakh rupees salary, we'll pay you 40 lakh rupees and the remaining 10 lakhs you accept in the form of share options. How does it work? You are given a piece of paper, and that piece of paper enables you to purchase a share for 20 rupees when in fact its market value could be 100 rupees. So for you, the way an employee perceives this is, because I'm an employee of this company, what is happening is I am able to purchase a share at 20 rupees, which is available in the market at 100. So by virtue of being an employee of this company, I'm getting a gain of 80. है ना? By virtue of being an employee of this company, I'm getting a gain of 80. So for me, that's compensation for the work that I have done. Now think about it from the company's perspective. The company feels, had I issued these shares in the market, I would have raised 100 rupees per share. But because I'm issuing it to you, my employee, I am only getting 20 rupees from you. Correct. Because I'm issuing it to you, I'm only getting 20 rupees from you. Don't you agree? I'm losing out on an opportunity to make 80 rupees per share. Right? So for me, that 80 rupees is a loss. Now, if if this you are going to purchase this share, say 4 years after 4 years from today, that means I am poised to make a loss of 80 rupees. Now I am poised to make a loss of 80 rupees, no doubt, but IFRS 2 says that don't record this loss at the end of the fourth year and put the entire burden on P&L of 1 year. Spread it over 4 years by dividing it by 480 upon 420. ठीक है? Fair value at grant date. Acha, this calculation is always required to be done at fair value at grant date, which will be given to you in the question. You are not expected to calculate the fair value at grant date. Okay. Now, when it comes to equity settled share based payments, how do we go about it? We record an entry, employee compensation expense account debit to equity. Why are we not so why are we crediting equity and not equity share capital? Because at this point, shares have not been issued. Na? At this point, shares have not been issued. At this point, you are parking the amount in a separate place in the balance sheet called the main heading of equity. When shares are issued, you will transfer it there. Now, how exactly do the calculations go? Okay, on 1st of Jan, a company grants 100 share options to 500 employees. Each grant is conditional upon the employee working for the entity until 31st of December 2003. At the grant date, the fair value of each share option is 15. ठीक है. During 2001, 20 employees leave, and the entity estimates that a total of 20% of 500 employees will leave during the 3-year period. ठीक है. Now, please understand कि when I'm talking about a 3-year period, overall, 20% of 500 are expected to leave. So tell me how many are expected to remain in service by the end of 2003? 500 minus 20%, that is 400 are expected to remain in service. That means only 400 will get the right to purchase the shares at a reduced price. So when you create a provision, when you segregate, when you set that amount separately, what you are supposed to do is 500 minus 20% of 500, which is 400. You should create this provision only for 400 employees. 400 into 100, okay, that is 40,000. You should do this accounting at fair value at grant date. 40,000 into 15, which is 6 lakh. ठीक है. 40,000 into 15, which is 6 lakh. This is the total loss you are poised to, suffer. But IFRS 2 says don't put the burden on the P&L of 1 year. Spread it out over 3 years. So 6 lakh upon 2, 2 lakh is the entry that you will record in 2001. You will create an entry, employee compensation expense account debit to equity. In some cases in India, and most of the clients that I have worked with, we don't credit equity, we credit ESOP outstanding. What is ESOP? Employee stock options. ठीक है. Now when we come to year 2, ठीक है, during 2002 a further 20 leave, and the entity now estimates that only 15% of the total original 500 will leave during the 3-year period. 500, this into 15. How many, when you are in 2002, when you are at the end of 2002, how many employees do you expect will remain with you? 425. So how much is the provision that you should create? 425 into 100 options per employee into 15, which is the fair value at grant date. This is the total provision that should be there in your books of accounts. And you don't create a provision for 637. So 637 500 is the total amount that should be there in the ESOP outstanding account by the end of year 3. You are at the end of year 2. So how much provision should be there by end of year 2 into 2 by 3? 4 lakh 25,000. You have already created a provision of 2 lakh in year 1. So how much additional provision should you create? 2 lakh 25,000. Okay? So now have a look at the explanation for year 2. Read this carefully. Yes, Vardhan, tell me.
सर इसमें एक्चुअल लीवर्स का भी एडजस्टमेंट क्यों नहीं हुआ, क्योंकि 20 तो जा चुके हैं पिछले
लेकिन
साल ही।
सी, किस ये ऑप्शन किसको मिलेगा? हु इज एलिजिबल टू रिसीव दिस ऑप्शन? ओनली दोज पीपल हु आर विथ यू बाय द एंड ऑफ 2003, राइट? सो 20 हैव लेफ्ट, नो डाउट. 20 have also left in 2002, not questioning that. But our provision cannot be created on how many employees are with us at the end of 2002. Our provision has to be created on the basis of how many employees are expected to remain with us on 31st of December 2003 when the option becomes exercisable, right? So all our calculations have to be done with respect to that date, not any other date. ठीक है. उस दिन कितने लोग रहेंगे? हाउ मेनी पीपल आर एक्सपेक्टेड टू रिमेन विथ यू ऑन द डेट व्हेन द ऑप्शंस बिकम एक्सरसाइजेबल, दैट इज 31st of December 2003. Fair enough. अब
Yes, sir.
सेम थिंग विल हैपन फॉर 2003, बट अब 2003 में आप एक्चुअल डेटा लेंगे. यू स्टार्टेड विथ हाउ मेनी 500, 20 लेफ्ट इन 2001, 20 लेफ्ट इन 2002, 10 लेफ्ट इन 2003. इसके बाद जो भी है आपके सामने है. ठीक है. वट एवर इट इज देयर, इट इज इन फ्रंट ऑफ यू. फोर अभी कोई एस्टिमेट नहीं है. अभी 450 एक्चुअल नंबर है. वेस्टिंग डेट हैज कम. सो नाउ यू विल क्रिएट अ प्रोविजन 450 इंटू 100 इंटू 15. 6,75,000 is the total amount of provision that should be created by end of year 3. You have created a provision of 2 lakh already. Then you created another provision of 2,25,000 in year 2. How much more will you create in year 3? 2,50,000 is the amount of provision that you will create in year 3. I am calling it a provision, but technically it is not a provision. Huh? Please understand, I'm calling it a provision because we are setting aside a part of profit, but it is technically not a provision. ठीक है. अब if you have to deal with it, what I have done is I have written steps that can be followed. But I believe questions like these are best tackled logically. Instead of learning steps, if you want to learn steps, you can do that. Absolutely no problem. Now, like you had a service based condition, you could also have performance based conditions for the trigger for share based payments. In the sense, there are service conditions and then there are market based performance conditions. Performance condition means uh, achieving a specific increase in entity's profit, completion of a project, entity achieving a specified increase in the markets in the entity's share price. So a market condition is defined by IFRS 2 as one that is related to the market price of the entity's equity instruments. An example is that the entity must attain a minimum share price. ठीक है. एंड नॉन मार्केट बेस्ड, सी मार्केट बेस्ड मतलब सी शेयर प्राइस इज व्हाट इज डिटरमाइंड बाय द मार्केट. सो इफ द target condition is that a certain share price should be achieved, then that is a market based condition. If the condition is something like, say for example, if the company hits total profit of so and so, then you will get you will become entitled to exercise the share option. Now that is considered as a non-market, so that is considered, that is still a performance based condition, but I wouldn't call it a market based condition. ठीक है. So in your exam you will have to understand ki, is it something which is only related to share price, or is it something which is related to some other aspect. ठीक है. If it is related to some other aspect, then it is a non-market based condition. Now, when you are evaluating the eligibility, market based conditions, IFRS 2 specifically tells you that they have already been factored into the fair value of equity instrument at grant date. Therefore, an expense should be recognized irrespective of whether market based conditions are fulfilled or not. Non-market based conditions must be taken into account to decide whether expense should be recognized in the P&L or not. Which means, say for example, the question says that employees will become eligible to exercise share options if the share price crosses a price of 60 per share. The question says that it is unlikely that the share price will cross 60. Still, you should account for the share based payments. But if the condition is something like key employees will become eligible to apply for shares if the total profit of the company or the total sales of the company exceed 500 crores, and the question tells you that it is unlikely that you will ever cross that number. In that case, if the question tells you that it is unlikely that you will ever cross that number, in that case you should not create a provision. ठीक है. अब why this is so, there are multiple reasons behind it, but what we should keep in, what I want you to grasp at this point is ki a, it is beyond the scope of our SBR discussion. Point two, uh, right now is not the time to get into the reasons. Right now, just remember that if it is a market based condition, regardless of whether it is going to get fulfilled or not, do your vesting and do your calculations and entries. If it is a non market based condition, do it only if the condition is getting fulfilled. Otherwise, don't do it. ठीक है.
So I have a small doubt. Like anything which is attached to the share prices will be treated as market-based condition.
Correct.
Only share price. There is no other thing considered as market-based.
No. नथिंग
Okay.
एल्स।
Thank you.
वेलकम। ठीक है। So these are performance based conditions. Now, if the options are exercised, ठीक है, there will be a date on which the options are supposed to be exercised, and then you get an exercise window. Exercise window मतलब they tell you that if the exercise, it's not as if आपको 31st of December 2003 को ही decide करना है. You get say a 3 month or a 6 month time to do that calculation. And if the options are exercised, then the accounting entry is bank account debit with the amount received from the employees, by equity account debit to share capital to share premium. Share capital will be debited with number of options exercised into face value. Equity will be debited with amount credited to equity in the past with respect to these shares. Share premium will be your balancing figure. This is the accounting that you do after the exercise date. And you could also have cash settled share based payments. Cash settled share based payments में क्या होता है? The situation is slightly different in the sense the scheme works in a way that today share price is 100. Whatever is the fair value of the share on the exercise date, the difference between that will be given to you as cash payment. So the accounting entry is employee compensation expense account debit. But what do you credit? You credit liability for SAR because it is a cash payment that is going to be made. Equity shares are not issued. Now, what happens is, in case of cash settled share based payments, say today the fair value is 10 rupees. On 31st of March 2026, fair value is 15 rupees. 5 rupees ka difference will be recorded as an additional liability. Now from 31st of March 26 to 31st of March 27, if the fair value goes up by 8, then the liability will be increased by 8 per option. That way. So year on year, the value will undergo a change depending on the fair value from one reporting date to another. And उसके बीच में if the amount is paid, the accounting entry will be liability for SAR account debit to bank account. ठीक है. So in case of equity settled share based options, these are calculated and accounted for using fair value at grant date. In case of cash settled share based payments, they are accounted for, or rather what you account for is the change in fair value from one reporting date to another. ठीक है. That is the only difference. Now इसका एक और complexity है where both of these are considered together, but I'm going to do a question related to that on the weekend, so we'll tackle that there. Apart from that, share based payment में ज़्यादा कुछ है नहीं. And honestly, if you look at the exam kit ना, you will see that there haven't been too many questions also based on this share based payment. IAS 19 पे still there are quite a few questions, but not on IFRS 2. ठीक है. Cool. Chalo. So I will see you all tomorrow at 8:30 a.m.